Hello to everyone. This is Salvatore Banco, head of Ho Chi Minh City and South China office for DMP Group. Vietnam is on the brink of a major financial transformation. In September 2026, global index provider FTSE Russell is set to upgrade Vietnam from a frontier market to a secondary emerging market, a milestone that could reshape the country's economic future. This upgrade didn't come overnight. Since 2018, Vietnam has executed a series of crucial reforms, removing pre-funding requirements for foreign investors, adopting a non-refund settlement model, enhancing transparency, and handling of failed trades. These steps have aligned Vietnam's financial market with international standards, and now the world is paying attention. With emerging market status, Vietnam joins countries like the Philippines and Pakistan, and instantly becomes more attractive to institutional investors who previously avoided frontier markets. And the impact? A massive potential surge of foreign capital. Analysts estimate the upgrade could bring between $6 and $10 billion of new investment. This includes sovereign wealth funds, pension funds, and global asset managers, deep pools of capital that rarely touch frontier markets. But the real story is FDI. Vietnam already attracted over 36 billion in FDI in 2024, and the upgrade is expected to amplify this momentum. One, stronger investor confidence. The upgrade reduces perceived risk. Foreign companies are more likely to reinvest, and investors who were previously hesitant now see Vietnam as a safer, more transparent option. Two, growing manufacturing and high-tech industries. From electronics to electric vehicles to green energy, multinationals are expanding production in Vietnam. Expect bigger factories, higher value supply chain, and deeper integration into global manufacturing networks. 3. Surging capital market activity. More foreign participation means greater liquidity, more trading activity, and a wave of new IPOs as Vietnamese companies seek global capital. 4. Boost for SMEs and domestic innovation. Enhanced access to foreign capital and global best practice helps smaller companies scale up, innovate, and partner with international firms. To support the investment wave, Vietnam is modernizing trading systems, strengthening post-trade infrastructure, and enhancing regulatory transparency, critical steps to maintain long-term investor trust. The momentum is undeniable. With its dynamic workforce, strategic location, and stable political environment, Vietnam is well positioned to capture the global shift of investment into Southeast Asia. Vietnam's rise to a secondary emerging market isn't just a new level, it's a strategic opportunity to attract more foreign investment, strengthen its economy, and become one of the region's leading growth engines. Thanks for your attention. If you need support in investing in Vietnam, please do not hesitate to reach out to us. We stay at your disposal. Thanks again.